Good afternoon, everybody. Welcome to the Daily Recap. I'm Evan Lazarus, and I'll be narrating this recap video for you. I want to talk about the market as we approach the last weekend of the summer, unfortunately, holiday weekend. We have Labor Day just a few days ahead of us. A lot of traders, probably taken to the beach, and price action so far this week, really reflects that. For those that, recall some of my videos from last week as I did, I think, one of the morning calls and one of the recaps, I kind of went over the structure for the S&Ps and what's been happening both in the short term and the long term. And by long term, we look back, basically a couple of, years at this point. So, I'm going to go back and kind of rehash a little bit of that. Here's the spiders. We can look at the SPX, the actual index here. Here's the S&P index. And, what I want to basically highlight here is this, ultimately this channel that the index has been in for, quite some time. And I can basically highlight it right here. For the better part of the last, let's call it, 2 years. Let me take some of these lines off. We've seen, very, very constricted range, but ultimately a real nice trend. You can see your 8 and 21 EMA clearly, continually rising with really not much deviation, although we have seen some, very swift and quick pullbacks intermittently along the way up, which is, again, to be expected. Every pullback has been met with buyers, and every pullback ultimately leads to a new high, which is ultimately what we, got here. We got this pullback back in early August, and then the last couple of weeks of August, we've seen the market, do its thing, finding support in and around this 21 EMA. Again, this is a weekly chart, and then, pushing to new highs. So, what do we do here? Well, the market clearly sits at a new high, although, not necessarily, you're not seeing a whole lot of enthusiasm. We can't deny the fact that, again, the trend is still the trend until it's not the trend. And nobody is smarter than the market, not I, not my colleagues, not anybody. But we, our job is to evaluate, price action as it continually tells us the story from day to day and from week to week, which is ultimately what I'm trying to do here. So we have this, clear breakout above prior resistance. What's next? Well, the people that have made money, by and large in this environment have been those that have been, looking to buy the pullbacks rather than, buying highs. Traders that typically buy at new highs or when new highs are made, really put themselves in really bad risk reward situations. And, buying new highs, if you had bought new highs, over here, again, you would have had to, hold on for the long run. So buying new highs typically is not a strategy that we implore. We encourage anybody to trade with. Again, recognize the trend. If the trend is up, look to buy pullbacks into rising averages. Don't chase highs. And on the flip side of that, you don't want to, be shorting at lows either. So that being said, we have these new highs here. And it'll be interesting to see what the rest of the week brings us. I'm going to flip back to a daily look. This is the daily. And you can see these new highs, the S&P, clearly getting above that, 2,000 mark. Yesterday we peaked at 2005. And today, very, very muted price action. The highs and lows really just a couple of handles away from each other. So very, very tight range in terms of intraday price action and not much enthusiasm. One direction or the other. A couple of days of this probably wouldn't be, truthfully, all that unhealthy or if anything, maybe a benefit. A couple of days of some consolidation, a pullback, even if just a few days of some back and forth price action, would ultimately be the catalyst for potentially, new highs, maybe into next week or, post Labor Day. So we'll see how the rest of the week plays out. My guess here, or if I'm taking a calculated approach, it's going to be that you're probably going to see a little more of this, like today, over the next couple of days. And I think barring any major geopolitical headlines or anything that would really cause this market to, have some sort of shift in price or sentiment, barring any of that, I suspect a little more ho-hum price action over the next couple of sessions. And that's, I think that's ultimately a healthy thing for new highs. We've traveled a long way. There's been a bunch of gaps along the way, but again, there are as far as those that are really more geared towards trading individual stocks, it is a very selective tape out there, and you have to focus on stocks that are performing and giving good price action. I think the one, the notable one would be Apple. Apple again, pull back into the average again today, seeing new highs here again in Apple. And then there's a couple of other I think more low key off the radar type names. We saw a nice move in GPRO, which was an off the charts trade from a few days back here through 40.30 was the entry price. So a nice move there in the last 8 or 9 trading sessions for GPRO. Twitter, of course, we got that again, another off the charts trade here for those that are subscribers to off the charts. A nice breakout through 45.50. And now, in a matter of 3 days, we traded up to these prior highs here at 48. And today we, made a little bit of a new high, but, a little bit of a pullback. So some consolidation here, and it wouldn't surprise me to see a few more days of rest with Twitter. Some of the other bigger, more notable momentum names, Google, really not performing while you're seeing, Apple, push and make new all-time highs. This Google, Google 6 days, 6 down days in a row while the market sits up at new all-time highs. So not exactly the most ideal looking structure here for Google. So while I'm not going to read too much into it, at the same time I think this is one of those trades. It's just it's not quite acting the way I think most people would like to see this name move. Amazon, some really volatile price action. With a big earnings gap down. And then, we had this gap over here, this gap up from 320 to 326 that, is now traded back to 346. So, Amazon, although there is some intraday opportunity here, and I'd say it's more for the shorter term day traders, it really is a challenging stock, I think, to get involved with. At this point, your moving averages are kind of crisscrossing back and forth. And, that makes getting involved very, very tricky. And like I said, I think it's really more for the short term opportunists than it is for the longer term traders right now. If you go to the weekly, again, a lot of ebb and flow in here, and so I'd be very careful with this particular name right now. One of the names that I've been keeping an eye on, and I wanted to put it into the off the charts newsletter, but I was waiting another day or two, but it jumped today. It was Whole Foods. Whole Foods is a pretty interesting looking chart, and by interesting I meaning, I think there's an opportunity here for a trade. I wouldn't read too much into this on a bigger level. On a bigger picture scale, Whole Foods is one of these storied stocks that had a remarkable run off of the 2008 lows. Again, I'm going back in time. Trading as high as I believe it's split adjusted about $65 or $66. To then, lose 50% of its value, now trading around the mid 30s. But I think this area represents, a good level in terms of support. You can see going back here, you have this area of in Whole Foods that looks like, kind of caught the short-term bottom here, and this could be one of those off-the-radar trades that I would focus on. A little bit of what looks to me like a little, breakout above resistance that happened today, resistance being about 39, that low 39 area. So you might want to watch for, a 1 or 2 day consolidation here in Whole Foods. I think we could see back to the, 42. And again, not a huge move, but I think in this tape you have to be, what makes ultimately a trader successful is being able to calculate and quantify risk. So that's the kind of opportunity I think you need to look at, and ultimately if Whole Foods can develop something more substantial, I think we'll keep an eye on that for the long run. Another one that I brought up last week, and I talked about tailwind. Stocks are good tailwind. Here's another one, LYB. good tailwind, good chart, good structure, and again continues to act well in this tape. So, focus on the things that are breaking out, that are making new highs, that have good structure and form to them. And I think you're going to wind up putting yourself in good tradable situations. And that's really for those that are performing well in this tape. And I have seen some frustration from traders, and speaking to a lot of my friends and colleagues and people that I know, there is a definitive level of frustration out there. They're seeing price go up, but just not able to really capitalize the way they'd like. And I think a lot of it is because, like I said in one of my prior videos last week, just pure stock selection, going after names that aren't really providing the opportunity that that they did at one time previously. So you really got to do your due diligence here. I do think the rally is a little long in the tooth, but again, you can't fight the trend, and what ultimately makes a trader a good trader is not necessarily how much money they make, but how long they're in business and how objective and flexible they are to shift and maneuver. What worked yesterday, if you're not willing to change or move forward, you're probably going to have a tougher time in the long run. So you really got to do your due diligence in this tape and find good tradable patterns and situations. Just throwing money at something or buying new highs, again, is not a strategy for success. But really, finding good, time frame alignment with good structure and staying with, as I said last week, with the tailwind. As always, hope everybody has a great rest of the week trading, and I will talk to you later.